Institution Mobile, quality e-learning experience on the go.
A manufacturing account is prepared by business organizations or business entities that produces the goods they will sell. Manufacturing accounts is prepared by business entity that produces the goods it sells. The account, that is, the manufacturing account, is needed to ascertain two major things. First, the cost of production. Second, the profit on the production of goods or the profit on the goods produced. The process of ascertaining the production cost involves the separation of cost into three major cost sections, namely cost of material used, 2. prime cost, and production or factory overheads. The process of ascertaining the production cost involves the separation of cost into three major cost sections, namely cost of material used, 2. prime cost, and production or factory overheads. The cost of material used is the cost incurred in purchasing the materials used in the production of goods. In order to ascertain the cost of material used, the following must be taken into consideration. First, take the opening stock of raw materials. 2. Add it to purchase cost of raw materials, that is, raw materials that were bought during the year. Add it to carriage inwards, then deduct returns outwards. 3. Deduct the cost of closing stock of raw materials from the sum of 1 and 2 above. The second cost is the prime cost. Prime cost is direct cost of production. It is expenditure that relates directly to the manufacturing process. They are the costs that will not be incurred if there is no production of goods or there is no production activity. Prime cost is made up of the sum of the following. First, cost of raw materials used. Second, direct labor. And third, direct expenses. The third section of the cost separation is production or factory overheads. These are indirect costs, unlike the prime cost. They may be incurred even if production activity is not taking place. They are expenditures for maintaining the factory. For example, rent and rates of factory. Other expenses that facilitate the smooth running of the factory production or factory operation, as the case may be. The sum total of all this cost is referred to as total production cost. Work in progress are jobs that are not completed at the end of an accounting period. The work in progress at the end of an accounting period is called work in progress carried forward. At the beginning of a new accounting period, they are the first set of jobs to be worked upon. At this time, they are referred to as work in progress brought forward. To obtain the cost of works or jobs completed at the end of an accounting period, the total production cost is added to work in progress brought forward, and work in progress carried forward is deducted. It is also referred to as factory cost of goods completed. the company or the business entity might decide to transfer the goods produced at cost to the sales department. If such is the case, it is the total factory cost that is being transferred to the trading account, where the actual profit made from the sale of the finished goods will be determined. On the other hand, some business entities may want to know how efficient and cost-effective is their manufacturing process, and in this case, they would like to determine how much they have saved by not going to buy the goods from outside or from suppliers. Hence, the goods are transferred to the trading account as a loaded price. A loaded price includes a profit margin in order to obtain a separate profit on the manufacturing account.
Fusion Mobile, quality e-learning experience on the go.